Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar ended Wednesday's session on a weak note as the US dollar strengthened further to 101.6065, driven by earlier comments from the Federal Reserve Chairman Jerome Powell, who indicated 2 more quarter percentage point cuts that could happen this year if the economy performs as expected. Last month, the Federal Reserve cut its benchmark rate by 50 basis points to 4.75 to 5%. The first reduction since 2020 due to concerns about the labour market. Further cuts are expected in November and December, but only by 25 basis points each month. With all eyes on the main event this Friday, the September jobs report, the non-farm payrolls, holds a forecast of a rise of 148,000 jobs added from the previous of 142, while the unemployment rate is expected to hold at 4.2%. So with the market slightly weaker, and we've got a Gravestone Doji posted, could see a little bit more to the weaker side into the coming session and look back towards the region of either a 68.75 and the support at 68.45 and firmer beneath, outlined here around 67.90. Although the top side target of 70 cents is on hold, I won't rule that out, and once we get this pullback and see bargain hunters return to the market, I expect to see a bounce and target 70 cents. Turning to the euro, with the US dollar rallying to 101.6065, the market has been somewhat weaker and now looking towards the challenge of 110.2030. In light of the heavy technicals, we should keep a close watch and continue to monitor signals and adjust risk strategies amid volatility, as a break of 110.20 could see a further slide down towards the region of 109.40 to 55 and reassess. But if we do see bargain hunters or demand emerging from this level of 110.20, then we should not rule out another upside test, but this level of 112, figure 15 is still somewhat tough to crack. Turning to the dollar yen, a Marubozu candle was posted and now somewhat bullish due to the fact the break above the 145 area. This has put now an upside objective to 147 and reassess from there. Given the technicals slightly bullish, any pullback may be shallow on the day and view support around 145, 35, 45. Towards the top side around 147 could see supply returning. A weaker play in sterling and now looks closer to the target of 132.0510, and a break there would see further risk down to 131.45. It would seem that most of the markets have staged somewhat of a correction and a bit of profit taking is coming back into play before the next step to the bullish case. A little mixed play when it comes to gold, but nevertheless still maintaining this bullish bias, which could see a rise up towards 2,678.80 and with a cap seen around 2,700. In light of the mixed technicals though, I am favouring a possible pullback towards the region of 2,636 to 42 before that rally on to 2,700. The challenge to the top side for oil found much difficulty around 72.60.80 and rejected there. Nevertheless, the market is still somewhat bullish since the large engulfing candle, and therefore could see a break of this level of 72.60.80, and if so, would put a $77 target. Any pullback though on the day may find support around 69.25.30. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.